Assalamualaikum and a very good day I wish to all of you. So today I would like to discuss about Fifo, Lifo and WAC. Fifo first in first out, Lifo last in first out and WAC weighted average cost. Question 2. Covina Corporation's Sendirian Berhad. The following information reflects the inventory records for Covina Corporation Sendirian Berhad. Opening inventory on 1st January 2019, 50 units at RM400, purchased in March 2019, 60 units at RM500, purchased in June 2019, 30 units at RM800, purchased in September 2019, 60 units at RM500, purchased in December 2019, 20 units at RM700. Total quantity of goods available for sale 220 units. So the sale in 2019, 180 units at RM 1500. Let's move to question A. Determine all the four information required below for Covina under inventory costing method of Lifo, Fifo, and weighted average for both perpetual and periodic for 2019. Revenue, cost of goods sold, gross profit, ending or closing stock or inventory. The calculation for first in first out in perpetual. First in first out, commonly known as FIFO, is an asset management and valuation method in which assets produced or acquired first are sold, used, or disposed of first. Here the transaction for January, March, June, September, and December. The sales 180 units and the gross profit here 176,000. Last in first out in perpetual, LIFO, which stands for last in first out, is an inventory valuation method which assumes that the last items placed in inventory are the first sold during an accounting year. Here the transaction in January, March, June, September, and December. The sales 180 units. We need to use the last items that placed in the inventory till we get the total of 180 units. The gross profit for last in first out in perpetual 168,000. For weighted average cost in perpetual, in accounting, the weighted average cost or WAC method of inventory valuation uses a weighted average to determine the amount that goes into cost of goods sold. All the transactions in WAC are in a line, and the gross profit for weighted average cost in perpetual 173,455.20. Next, let's move to the periodic. First in, first out in periodic. Since there are less transactions in 2019 for Covina Sendirian Berhad, so the calculation for first in, first out in periodic same as the calculation for first in, first out in perpetual. The gross profit here 176,000. Last in, first out in periodic. The total units in purchase 220 units, for the sales 180 units, and the balance of the inventory 40 units. The gross profit for last in first out in periodic 168,000. And the calculation for weighted average cost in perpetual. As you can see here, the weighted average cost method divides the cost of goods available for sale by the number of units available for sale. The cost here 118,000 divided by the units available for sale, which is 220 units, equal to RM 536.36, and the gross profit for weighted average cost in perpetual 173,000 455.20. So here their profit for Fifo, Lifo, and WSC in perpetual and periodic. For question B, during inflation periods, which method is the best for Govina Sendiri and Berhad to employ to enhance its profit standing, and why? For me, LIFO in perpetual and LIFO in periodic to get highest gross profit and net income, and best to avoid obsolete stock. That's all from me. The explanation about FIFO, first in first out, LIFO, last in first out, and WAC, weighted average cost. Thank you for watching my video, and bye!